Welcome to Transform Finance's event today. My name is Jennifer Hanley Giersch. I'm going to moderate the session with our experts here today. I'm managing partner at AML, a company which offers external money laundering officer services and individual advisory support on various elements of AML CFT compliance, largely to the investment fund sector, but also to corporates and professional services firms. Now let's jump right into our session today, which will focus on identity verification, meeting KYC and AML requirements in the DACH region, with a particular focus on crypto assets, as this is an area which poses significant challenges both to businesses operating in the crypto space as well as more traditional finance organizations looking to engage with the crypto sector. Now, we have four experts with us today who will be able to share their insights with us from different perspectives. We have Rayissa, Armata, Head of Regulatory Affairs, and Jason Tucker-Feltham, Head of Crypto Sales, both from IDnow. And they're really at the forefront of supporting organizations in meeting KYC requirements on a daily basis. We also have Nico Gabriele in his role as a policy advisor at the European Central Bank, who will share his perspective on the topic, and Peter Müller, who has experiences working both in digital asset businesses and more recently within an investment bank, and he'll be able to share some insights on the operational challenge and how bridges can be built between the new and the old world of finance, so to speak, whilst ensuring that AML CFT requirements are met at the same time. Now, before we move into the discussion, I just want to set the scene a little bit. Why are we talking about crypto assets? They've existed now for more than a decade, but efforts to actually put in place effective public policies have been somewhat slow, but they've definitely moved to the top of the global policy agenda recently. This is partly because crypto assets, after years of being niche products, are now being held and in some instances used more widely also. So the growth in their market capitalization has been volatile, and at the same time their interconnectedness with the financial sector has increased. So amid the decline in crypto asset valuations, the failure that we've seen in various exchanges such as FTX, for example, and other actors within the crypto ecosystem, as well as the collapse of certain crypto assets like Terra, USD, there's been an intensification, and the need for effective policies towards these assets has become more urgent. Now, we have two legislative packages due to be passed by the European Parliament today and tomorrow, which will really take great strides in implementing a regulatory framework for crypto assets. This is firstly the AML CFT package, including the revised transfer fund regulation, which will see the implementation of the EU travel rule. And secondly, the markets in crypto assets regulation, MiCA. Now, all of these legislative measures aim to regulate the crypto space. Today's session is going to focus on aspects of MiCA, which are most relevant for AML CFT compliance, excuse me, especially at the nexus to the AML CFT package. For the purpose of today's discussion, the key point in terms of the AML CFT package is that crypto asset service providers will become obliged entities under the EU money laundering regulation and will be subject to customer due diligence requirements, transaction monitoring and reporting, as well as other AML requirements. Now, when the package comes into force, the new AML CFT rules and the AMLA that will enforce them at the EU level will extend to the entire digital sector operating in Europe, and will oblige all crypto asset service providers, CASPs, to conduct extensive due diligence on their customers. The rules cover transactions over 1,000 euros, also from so-called unhosted wallets, which is a wallet address owned by a private user as opposed to an exchange, and when they interact with hosted wallets, which are managed by crypto asset service providers. The AML CFT package will be aligned with the markets and crypto assets regulation, which is really an entirely new regulatory framework for specifically European crypto assets. MiCA as a whole aims to protect investors and ensure the financial stability, whilst at the same time allowing innovation and fostering the attractiveness of the crypto sector. So obviously, with this strategic aim, the nexus and the link to the AML CFT package is evident. Now, MiCA includes new classifications for digital assets, regulatory regimes linked to different assets, proof of funds requirements for stablecoin issuers, and the requirement for any company seeking to issue digital assets to publish a white paper containing information about the project, but also about the risks, which will also be relevant for compliance professionals. Now, there are some gaps in the MiCA regulation in relation to decentralized systems. NFT platforms, for example, are not covered in the current definition of crypto asset service providers under the MiCA regulation, to the extent that they do not provide services in crypto assets that are fungible and non-unique. Also, the MiCA draft has an exclusion clause for so-called peer-to-peer transactions. The text defines a peer-to-peer transaction as one not enabled by a crypto asset service provider. So hence, where a DeFi protocol is sufficiently decentralized, transactions with the DeFi protocol are excluded. So now this has also been a last-minute development in the AML CFT package in order to close this gap and to mitigate associated money laundering, terrorist financing risks. The AML CFT package legislation has expanded the definition of crypto asset service providers to include NFT platforms. But most likely this will be down to definitions again, as there's a kind of a wording topic here. If an NFT platform is truly decentralized, it will not be considered a CASP, and thus would be out of scope of the AML CFT framework. So this is just like a brief overview of some of the topics that we want to touch upon and drill down to in more detail with our experts today. But before we move into the discussion, I'm going to ask our experts just to introduce themselves, starting with Rayissa, so that you know who they are, where they come from, and then we'll move into the discussion after that. So over to you, Rayissa.
Thank you, Jennifer. That was a great summary. It's really nice to be here with all of you. Thank you. My name is Rayissa Armata. I head the regulatory affairs for IDnow with Jason, my colleague, who's here as well. We are a software solution company that offers or touches upon the Know Your Customer or KYC compliance requirement, which all of you and our guests are quite familiar with. Nice to meet you all. Thank you.
Perfect. Hi, everyone. I'm Jason Tucker-Feltham, head of crypto sales at IDnow. I've been in the crypto industry since around 2018, where I founded a crypto consultancy whilst working at UniCredit Bank, which is a Italian banking group. I was at UniCredit, actually lobbied for proportionate regulatory consideration of the banking industry with regards to MiCA. So very much have some knowledge of MiCA and its impacts on potential impacts on the crypto industry. So these coming days are going to be quite crucial for the future of crypto, and so it's going to be an interesting debate. So I'm sure everyone needs to stick around, tune in, and listen, and I'm sure we're going to have some very interesting perspectives.
Nico, do you want to introduce yourself, and then Peter?
Yeah, thanks, Jennifer. My name is Nico Di Gabriele. As Jennifer said, I work in the Supervisory Policy Division of the ECB, and I have been dealing since quite a long period of time with crypto and more in general with anti-financial crime issues. And I have been leading activities at international and European fora in this area. Thanks.
Hello, good morning, everyone. My name is Peter. I am currently a financial crime officer with UBS, with their Europe SE, so the European Union in Frankfurt, but also general for the wider EMEA region of the investment bank. and they're mostly engaged in KYC advisory, but also other topics all around AFC. And before that, I have been working for a fintech in Berlin that was heavily engaged also in the crypto sector, and well, I got to know the sector in this way, and previously started my career in the monitoring with Deutsche Bank. Yeah, happy to be here.
Yeah, so thank you for all those introductions, and great that you're here today. So I just wanted to start with maybe something quite specific before then moving into general topics, just to get a sense also maybe from everybody here, what you think are the most important drivers in terms of KYC in relation to AML CFT to be expected this year in the context of the AML CFT package and also in the context of MiCA. Who would like to start?
I'll take a stab at that first. Thank you. I think my colleagues here will have much greater details from their perspective, but I think as a general overview, we are seeing, obviously, this is a really ambitious project to harmonize regulations across this ecosystem in this market sector. And the unification here, or the transparency that is supposed to come out of this, is really important. And one of those steps is to enable KYC to do its job and enable trust in this ecosystem. If we're going to have a successful crypto hub here in Europe, whichever country and city that ends up being, we really need to instill certain rules and regulations that enable a functioning and healthy ecosystem. So I think the KYC aspect is very important, and the regulators have looked into that and made that one of the important aspects of making sure this works.
Thank you, Rayissa. Do you want to add to that, Jason?
Yeah, no, what I say is that, a lot of people assume across the EU there's a great deal of harmonization. And yes, there are baseline requirements across the EU in regards to AML and KYC and such like. But, jurisdictions take their own sort of take as to how to interpret regulatory requirements and what are the specific requirements for operating in a jurisdiction, such as BaFin's requirements over in Germany, such as in France. It's always going to be the case that the more harmonized a territory is, the better place it is to be a home for crypto. As we're seeing right now, a lot of crypto exchanges, crypto entities, CASPs, whatever you want to call them, they're struggling to keep up with this shifting global crypto regulatory landscape. They don't fully understand what those rules are, and they don't know how best to comply with them. So with the introduction of MiCA, there's going to be some certainty as to what are the rules of the road, what needs to be done to comply, what they need to do in order to mitigate money laundering risks and such like. And so this is a great development for the industry, because with clarity brings institutional interest, and with clarity brings the ability for obliged entities to actually go ahead and do the right thing, implement the right technologies. And so I see it as a very positive development, and it's actually most likely going to lead to a lot more crypto entities instilling better internal processes and controls to meet those requirements.
Yeah, thank you, Jason. And before I come to you, Nico, I thought maybe I might ask Peter, especially since, he is working at a financial institution, what his take is, especially in terms of what Jason just said, whether there will be more comfort on the side of larger institutions to engage with the sector, and if yes, what those kind of implications might be.
I would definitely agree with Jason. I mean, in generally, globally active bank, like the one I'm working for, they're definitely embracing what's currently happening on the EU level with the AML package. In general, this harmonization is definitely benefiting us with, as I said, European unions that's now maybe in Frankfurt or Paris or wherever. So that's a great development for us, and it's definitely giving more easier processes and makes everything a bit more streamlined in that sense. And I think MiCA is definitely also a part of this. Also, if a bank is not engaged in crypto themselves, because obviously acting with crypto, like crypto service providers, is way more, well, more secure for us if we know that they're regulated after certain standards, and if we know that there is a common understanding of what should be implemented and how also at least this compliance program should be shaped. So it's definitely a positive development, and we're looking forward, and exciting what's going to happen today, I guess. That's it.
Yeah, thank you, Peter. And I'm sure, Nico, you have something to add on this, but I'm going to throw in another question as I hand over to you also. If you could maybe comment on the kind of the key challenges also facing the European regulatory space and how the AML CFT package will hopefully improve the supervision and also ensure maybe the development of a common understanding of regulatory practice across the EU also.
Yeah, thanks for this question. That gives me the chance to, let's say, highlight the core problem that we have been facing since the enactment of the third AML directive. We have been living in the European Union in an environment where we have more or less a common financial market policy. And when I talk about common financial market, I want to put emphasis on the banking market. But we don't have yet, unfortunately, a common policy that translates into common implementation of AML CFT rules. This means that practices are divergent across countries. And this is to the benefit of those that don't want to comply with the legislation, because the system from a European perspective is as strong as the weakest link. And unfortunately, we have seen that back in 17, back in 18, a few instances where very weak links emerged, and they caused damages, at least from a reputational perspective, for the entire union. So the problem is not just to have a single policy. The real issue is to have a common implementation of the very same policy. And this brings me to KYC. We had, since a few years ago, common rules on how the onboarding of clients have to be done. But when it comes to the effective conduct of the controls, each and every entity in each and every member states did differently. And even within groups, there were differences. And differences within groups derived from the fact that national legislation transposing AML directives was different. Let me bring one example regarding the remote customer onboarding. BaFin set up very stringent rules, but more process-oriented than substance-oriented, some may say. In other countries, emphasis was put on, let's say, more practical aspect, enhanced liveness check in Spain. Italy went with 7 different risk controls. Maybe 8 would be better, or 6, I don't know. So if you have an entity located in France doing business on a cross-border basis by benefiting from passporting, that is one of the beauteous things that the European legislation has brought to us, because it enables doing business in a very easy way, you have to comply to a certain extent with the legislation of your country, but you are also under the scrutiny of the supervisory authority of the country where your clients are. And there is also a bit of unclarity regarding what your regulatory obligations are. So here we should have supervisory authorities doing the very same thing by relying on the very same piece of legislation. And we have to thank the legislator now for moving from the directive approach to the regulation approach, because regulation is directly applicable. And I would say that in this case, there has been not that much leeway for national options, because you may have a regulation, but with a lot of options given to national supervisors, and this brings down the effective level of homogeneity. So the real challenge will be to have regulatory technical standards that put in practice the rules that are in the package that the Parliament is going to approve during this week. Unfortunately, we have to wait a bit for the secondary legislation, but better late than never.
Yeah, thank you for that, Nico. But just following up now, obviously, so we will have the regulation, yeah, which will be a standard across the European Union, but we will still have national regulators interpreting the regulation in their own way. Is there any indication that working groups are established between, or that will be established between AMLA and the national regulators, or working groups between the EBA and the national supervisors to develop a common understanding and to control and supervise legal entities in a common way?
The setup, the drafting of the regulatory technical standards will be done by AMLA as per mandate given by the legislator, but AMLA will not be alone in this effort. AMLA will be supported by national competent authorities because, as you said, working groups will be established in order to prepare the very large secondary legislation package that is by far and large more important from a practical perspective than the level 1 legislation. Because in the secondary legislation, you have instructions on how KYC has to be conducted, on the controls that supervisory authorities have to perform, and you have a clear definition of the risk appetite that supervisors should have. Clearly, supervision will be centralized only for the 40 maybe largest entities across the union. Some may say that is not that much, some may say that is too much. I will say we have to see, but what is really important is that there will be a supervisory authority, AMLA, conducting controls on the way national competent authorities have been performing their activity. And here I can say, moving from the experience of the European Central Bank that has been given with this mandate of performing an assessment about the quality of the supervision of national competent authorities from a prudential perspective, we have brought a lot of harmonization. We have dramatically improved the way the prudential supervision is conducted at national level with regards to less significant institutions. Less significant institutions in the banking sector are those banks that are below the threshold for being subject to the direct supervision of the European Central Bank. And the approach taken by the legislator for the AML framework is very much inspired by the architecture, the regulatory architecture that was set up in 2013 for the single supervisory mechanism, that is for prudential banking supervision. So I do believe that the architecture as it has been designed in a very right way. Inspiration is not just about the architecture, but also the way the supervision is going to be conducted. But let me say one thing that it is quite obvious. The difference will be made by the people doing the job. And it is very important that the very good people will be hired.
I mean, it's a really interesting point, isn't it? We're seeing the lack of consistency in certain specific jurisdictions, and with those symptoms, I guess going forward, we need to understand what will resolve those same symptoms in this crypto landscape. So the more cross-fertilization that can occur across jurisdictions, the more collaboration that we can see, the more consistency we can see, will actually aid to the effectiveness of the regulatory framework, and it will aid actually doing some service to this industry, which has seen so little clarity up until now. So yes, that the more working groups, the more collaboration across jurisdiction, I think is going to be very, very positive.
Yeah, that's great. Thanks for that, Jason. In fact, the EBA has been quite proactive in that regard, also setting up working groups around the transfer fund regulation, bringing in experts also from the private sector to engage with them to support in developing guidance that is fit for purpose as well. So now I want to move into speaking maybe a little bit more specifically about the digital assets, and maybe also coming back to Rayissa. If you could maybe provide some thoughts on how the existing AML CFT regulation is specifically being adapted in order to more effectively mitigate the risks in the crypto space, you know, what the positive developments in that area.
Yeah, sure. So, I mean, I think we've touched on some of the overall goals here is harmonization. I've heard that several times, and that's a very important concept here. But we also have to remember that this doesn't happen overnight. So I have to give credit to the regulators for taking on this huge task and beginning the process. I mean, I think we can already see when we talk about KYC and harmonization being so difficult across Europe, when we look at, for example, the Anti-Money Laundering Directive 5, that was one of the directives that actually introduced the concept of a qualified electronic signature as a form of identity verification. This is a first step, I think, that was really important across Europe because it allows providers like us to offer a solution according to a European regulation, the EIDAS regulation on electronic identification and trust services, against the certification framework to now offer at least one product or products according to the EIDAS regulation that can be used throughout Europe. So these are very important steps that are now we are also entering a new iteration of EIDAS. So EIDAS 2 is being drafted as we speak. So all of these movements and developments are geared towards reducing risk and introducing harmonization to this sphere. So I think that our participation as a company or a private sector company in this whole ecosystem is we wear so many different hats. We try to ensure that the security requirements to offer these innovative solutions to our customers remain secure and trustworthy. At the same time, we want to help our customers offer a service that's easy for the end user to use, that the end user feels it maintains their privacy and allows them to have ease of service. At the same time, we have to ensure that our customers meet their compliance requirements. So there's so many different levels when we speak of this whole movement, but at least we are seeing progress coming through.
Yeah, thanks for that, Rayissa. And you mentioned EIDAS, and there's a question coming through here from Lorenzo Vacca that I thought maybe I might just put your way, or Jason as well.
Okay.
What your thoughts are on whether the EIDAS is a way of simplifying and unifying KYC processes across the EU, as well as making it more watertight, so to speak, both for crypto and for non-crypto financial institutions.
Yeah, I'll take it. I mean, you know, right now we're speaking from the IDnow lens. So we've got a platform and we've got multiple different products, and often this is a surprise to our customers. They're like, okay, KYC is simply you just submit a document, your ID, your passport, your driving license, and do a video liveness, and you're done, right? It's not quite the case. You need to have different products depending on what regulatory requirements you're looking to satisfy, what jurisdictions you're looking to operate in. And so, yes, by having a single technology which can be used across a greater range of jurisdictions, of course, is to the benefit of both crypto clients and other regulated entities. So I think by having unified approaches to onboarding, I think that's going to be very, very useful. And yes, I believe it goes in that direction. But still, we are living in a world where we have to have dedicated solutions depending on where customers are based. And I'm hoping that there's going to be increased convergence and we're able to leverage more standardized methods in the future. Yeah.
maybe another question for Nico, whether, in terms of what's in scope and what's not in scope of digital assets in the AML CFT regulation, what's in scope and out of scope in MiCA, and how that will all kind of be resolved in terms of supervision as we go forward, because there are some aspects of the regulation, as I mentioned in my introduction, which leave room for interpretation. Nico, that was for you.
Sorry, I had a lag in receiving your question. MiCA, or better to say, the single AML rule book, it is a dramatic improvement in comparison to the AML D5, because in the AML D5 we had only wallet providers as being obliged entities. So the focus was, or better to say, the focus is still now only on entities that are engaged in the transmission of value. With the single rule book and MiCA that is cross-referenced, all the parties that are in the scope of MiCA, meaning exchanges, providers of advisory services, trading platforms, will be obliged entities from an AML perspective. So we are going to have a paradigmatic shift in terms of coverage. However, and leveraging on what the US Treasury mentioned in the report published on the 6th of April, MiCA falls short of addressing the issue raised by decentralized finance. The US Treasury Department said that decentralized finance poses a threat to the security of legitimate activities, because a number of entities claiming that they are autonomous organization, that they are not subject to any sort of governance control by any party, are claimed to be outside of the regulatory perimeter. Maybe this is just a key problem outside the EU. I cannot tell this right now, but still MiCA does not address decentralized finance. This was a deliberate choice of the legislator. Probably in the near future there will be a need to address this, because decentralized finance has been increasing in terms of size, and probably a significant portion of illicit activity has shifted from centralized exchanges, from legitimate providers, to those that are somehow decentralized. But here we have also to debunk a myth that many claim to be decentralized, but behind them there is one person or a group of persons that have a strong control on the functioning of the smart contracts, on the functioning of the platform. And they should be subject to the very same rules that are applicable to entities that are already provided with a license or are requested to go for a registration with a regulator.
Thank you for that, Nico. Is there anybody else who wants to add to that?
Maybe just short. I find it interesting that we're moving to DeFi, and I also found the question of eIDAS interesting. I have to admit, I'm not really an expert in the topic, but I think especially these two topics together are interesting, because just a while ago there was also a publication from the European Blockchain Association together with different other publishers who actually thought of how to regulate decentralized finance with the eIDAS and how to find these decentralized solutions for KYC on a European level. So I think it's very interesting how this could maybe help with regulation of this whole DeFi sector. I think DeFi is very interesting. I can say, maybe also working in an investment bank, you see there's a lot of happening in the market. It's a lot of new technology, so obviously also banks are interested. And I think it's just obviously quite difficult once you hear DeFi, what are we actually talking about? And it's definitely currently also not helpful if we talk about MiCA, and DeFi is not really in yet, right? So that's kind of something where I'm also hoping that there's more push, maybe from the parliament, but also later on, that we quickly catch up with DeFi in that sense and also regulate it in there. That's also a big part, which in my opinion is definitely going to grow in the whole market, the whole big segment. And yeah, I hope that's getting more and more implemented in this, and maybe EIDAS can be helpful for that.
And I think,
I mean, I think like the EU AML CFT package is really, in the last minute trying to close that gap and, trying to bring these NFTs into scope to some extent, and maybe also covering the topics that Nico just touched upon, where, there is an individual who actually controls a certain wallet, and therefore it's maybe not decentralized in the sense that would exempt it from AML CFT due diligence requirements. So I think the scope has definitely been increased there on that side, which is a really good thing. I mean, my inclination would be, if in doubt, do your due diligence, rather than say, oh well, do I not have to due diligence here because they're kind of unhosted or not in scope, so to speak. I think the intent of the AML CFT package is to include as much as possible, and at the end of the day, always bearing in mind that we want to reduce the risk of this new sector being exposed to money laundering and terrorist financing. So I think that's an important point there. I don't know if Jason or Rayissa.
Jennifer, if you allow me just one remark. I think that for legitimate players, there is only a benefit to be taken when there are regulatory gaps being closed, because the cost of conducting in an honest and decent way their business will be not avoided by parties that may escape from the cost of the regulatory compliance. So it is also an issue in terms of competition, because if you are a licit player, you bear a large chunk of regulatory costs that are not borne by other parties. It is a matter of fair competition, I would say.
Yeah, no, that's a good point. And that's where, the regulatory guidance will be so important, because the gaps do exist, and it will be important for the guidance that's provided to be clear in terms of what is expected, so that regulated entities will be regulated in the same way and supervised according to common standards. So that's what the practitioners are all hoping for. Jason, Rayissa, is there anything that you wanted to add to that? Otherwise, I would move on to talking a little bit more about implementation.
Right. I mean, as expected, the low-hanging fruit is always going to be the centralized entities, centralized parties, such as, example, exchanges, centralized exchanges. And this is why regulatory authorities have been targeting centralized exchanges with enforcement actions if you're in the US, or different actions depending on where you're based and where your customers are based, etc. But of course, we have an increased amount of flow in DeFi. We're having a lot more conducted on chain with platforms that don't have an intermediary that's operating them, and yet understanding who is in a position to perform controls or implement controls or changes to the code can be challenging. And so regulators, I think, have been having to take a bit more time to understand what can be done for DeFi platforms, such as Uniswap. And with that one exchange platform, you're seeing more being conducted in terms of crypto conversion than some of the largest centralized exchanges on the planet. So there is a huge amount of value which is being converted on chain, directly on chain. And in some cases, there are platforms which are being used as money laundering mixers, and this is purely being done on chain. So there's clearly a big money laundering risk from on-chain transactions and on-chain conversion that needs to be addressed. It is the elephant in the room. It's a lot more complex to have a harmonized set of rules which can be deployed for DeFi. But I think it has to come. And without targeting that side of crypto, I think we're simply going to be pushing bad actors to use those means, because if there's not a standard in place, then of course bad actors are straight away going to go down that route, and it's going to be the easiest way to conduct their illicit activities.
Yeah, so we can just hope that basically the regulatory framework around the traditional financial institutions and the CASPs are strong enough in order to withstand any of those risks that are on the periphery, because at some point there's always that kind of like, interaction probably along the line. So that's maybe in the short term what we can hope for. Rayissa, did you want to add to that, or will we move on?
I can just say that I think, we're also talking about regulatory gaps that are trying to be tightened and reduced in order to reduce this risk. I think it's also important to bear in mind that there are technology gaps. There are differences between the KYC that we use in a centralized environment for traditional banking for our crypto service providers now, exchanges and wallet providers, and those that Jason is referring to, and these initiatives that are ongoing for the on-chain blockchain ecosystem there. And closing that gap is not going to happen alone from the regulatory perspective. We do need, and this is a great opportunity for companies like ours and our peers to be involved in that transition and to work on not only the regulatory and legal aspects and understanding privacy, but also looking at the technologies that are out there that can be used, ones that standards and protocols that need to be implemented and developed, because this is a global cross-border service product for everyone. So we have to make sure that that stays open, and we welcome that we're able to be part of that process. So this is great for us, and discussions like these help us get that message out there as well.
Super, thanks for that, Rayissa. So I wanted to now maybe come back to Peter as well. And just, there are probably a lot of people on the call here who are actually, working as money laundering reporting officers in financial institutions, in CASPs. What do you see as being the biggest kind of operational challenges, but also from an implementation point of view, in terms of MiCA, the AML CFT package, and KYC? Are there going to be some big changes, or will there just be modification linked to existing processes? And maybe if you could touch upon that, and also talk about maybe tools that are necessary in order to be compliant. Any must-haves, any nice-to-haves? Would be good to hear your thoughts on that.
Yeah, it's a big question. Well, I hope that MiCA is gonna help. Also, as one of the people who are in a bank, and there's obviously, I think on the topic in general, there's a lot of interest, but a lot of times there's either not much knowledge or also not much time to dive into the topic and to get to know what's happening there. I guess as I said before, from business side, for example, for an investment bank, but also for wealth management, you can always say that there's an interest to engage, to get new business fields in that sense. But there is a lot of, insecurity about it. There's a lot of, let's say, also fear that you tap into kind of dark waters in a way. So my hope is definitely that MiCA is going to help with establishing these standards also for the CAS, that we can say, well, obviously they are not exactly peers, but they are kind of peers now as financial institutions in a way that they're regulated this way. So we can, with our due diligence on these companies, for example, we can, we get feedback in a way that helps us to say like, well, that gives us a new, better understanding on the risk-based approach. If I could wish, I guess compliance officers a lot of times have wishes, but it's always difficult to actually get them fulfilled maybe in a way. I previously worked in a fintech where there was this tool software like Chainalysis, Elliptic, that can actually trace and look and use the great nature of the blockchain that is pseudonymous, which is, for example, way more exciting than, let's say a lot of banks actually take cash, loads of cash, right? And we don't know at all where it comes from. The blockchain actually allows very in-depth analysis in that sense. So if I could wish for this, I definitely would wish for such a tool. But obviously, there's always at the end the question, how much effort you want to put in, right? So how much are you actually going to go into this business? How much is this actually worth it? There's also training needed for this, understanding needed for this, partnerships needed for this. So I think, this will be interesting to see in the future how this is turning out, how strong the bonds are growing more and more between crypto and traditional finance, let's call it this way. So that's going to be interesting in general, I guess. These kind of providers are important for these tools, these monitoring tools, but also just recently I heard of startups that are more and more working on, for example, for private persons that say, well, my wealth is derived from crypto. And they basically work on making nicer outlooks, nicer KYC data saying the funds are from there and we can prove that they're fine, right? So these things I hope are getting more and more attention in the banks and also more and more, well, let's say approval in a way, so that we can actually work with these tools and this way facilitate and lose a bit of this fear of crypto, while at the same side, it's still a higher risk sector. So that's not going away that fast. Also not with MiCA, I don't expect that.
Yeah, thanks for that, Peter. Now, before we've only got just over 10 minutes left, there are some really good questions which have come through from the audience here that I'd like to run past you. We have here, we name the person, Marcel Guel from Fair, who's asking, will MiCA change the perception of cryptocurrencies being perceived as an increased risk for sources of wealth? I know it's based on a risk-based approach, but every entity in the financial services field, but an expert opinion would be much appreciated. So basically, will the source of wealth be considered high risk in relation to cryptocurrencies a priori? That's how I understand the question.
And, I think Peter has actually articulated something that's very powerful with crypto. You're able to explore open blockchains using the likes of elliptic or chain analysis software, and you can see no matter how many hops in the past where these crypto assets have emanated from, and you can see the risk on chain. Whereas if you are sent, digital euros or digital pounds or dollars, you won't necessarily know for sure where that has really come from. You just know it's come from that party, and you can do some level of digging, but it becomes very, very impractical to do an in-depth investigation as to the source of wealth of hard fiat currency. With crypto, you get a lot more transparency as long as you know what those pseudo-anonymous addresses tied to. And in some cases it might be harder to establish who are the beneficial owners of those crypto addresses. So that's a challenge. But by and far and large, crypto addresses allow for a level of transparency that has never been achievable in traditional finance. So there's a bit of a give and take there. But if you are seeing transactions between CASPs, then of course that becomes a lot clearer as to where these crypto assets have been sourced from, because those are going to be followed by the likes of chain analysis. And so you are going to be able to build a picture about a person or an entity that might be more bulletproof than what might have been achieved before. So I would think that with the backing of a regulatory framework such as MiCA, this is actually going to be very positive for the perception of crypto assets, because it's just a store of value, and by having the tools in place and the requirements in place to ensure that entities are good actors, then I think overall is going to be a positive development. So I believe perception will improve.
Yeah, so that's interesting. We'll see how that's then reflected in the national risk assessments at the EU level and in the individual countries, because crypto is like investment funds or other sectors seen to be high risk, but maybe over time that risk can be adapted if this transparency is seen to really be a way of mitigating the risk. But coming back to your point also about the source of wealth, this is something that we see and which is also accepted by the regulators, is that, you know, if you cannot necessarily determine the source of funds immediately, you can, through your screening and your that follows on from your KYC, you can determine source of wealth, and probably having transparency across the blockchain and using these tools will be able to inform that risk screening process, and then at the end of the day also reduce your residual risk once you've been through the screening process.
Jennifer,
another question. Yeah.
If you allow me, I would like to say that I fully concur on what Jason said, but I have also to make a remark that the possibility to trace back the source of money in crypto is far better, as he said, than in the traditional finance. But we have also to be mindful of one aspect, that when the money goes through or crypto assets go through a cusp, transactions move from on-chain to off-chain. So entities dealing with a client should not only be satisfied with the full traceability of the transactions, but also about the quality of the AML controls of the cusps that were involved in the transactions. Because if you have a cusp that is a rogue actor, it could be that off-chain transactions permitted the transfer of value from licit to illicit actors and vice versa. So transactions that cannot be screened by any analytical tool right now available could be a way to commingle licit and illicit assets. So still, it remains very important to conduct an assessment about the quality of the AML controls, and also I will say the moral compass of the senior managers and the shareholders of any cusp that is back in the transaction chain.
Bang on the money.
Yeah,
Nico.
that's a very good point. Yeah, definitely. Yeah. That's a very well put. Yeah, thank you for that. Does anybody want to comment on that one? Otherwise, I would move on to the next question.
Maybe just a short point in that. I definitely agree with what both Jason and Nico said. And I think also with what I said before, I think two crucial points are in this question that Marcel was. So I guess MiCA will, hopefully, that's also my hope, help for another perception. But it's definitely important also on how we deal within our AML, our compliance teams, and how much awareness we raise and how much knowledge we raise, right? We obviously Nico now mentioned already factors that are important for this assessment. And I think it's crucial to get away this fear from crypto and say, like, okay, there is actually an assessment we can do. There are ways to deal with it. And then we can also go into how can we assess this, right? And how we want to deal with it. So that's this knowledge is one sense. And on the other hand, that's also why we talk today about this whole topic, where for every good investigation, also on the pseudonymous blockchain, at the end, you can make nice, I mean, I love to make these graphs, right? It's nice, gives you a nice view of it. But at the end of the day, you really need good KYC for this, because you need to do how to connect this, as Nico said, this off-chain, right? This ramping. So in the end, this is important. So you need to know your customer to actually can do this assessment and to also can say, well, I know there is source of wealth in a way, because I know this source of wealth in a traditional finance way, how this maybe moved on the blockchain and came back, right? So these points are very important in that sense. So definitely the KYC is the strong point in the end. And well, I would say the awareness and the knowledge of crypto technology.
Yeah, thanks for that, Peter. So it's really definitely at the end of the day, it's down to the individuals and the quality of your KYC as well. So regardless of how much is moving on chain, there's individuals at the end of these chains as well that we have to know a lot about, and do know a lot about, probably in the case of your investment banking clients. Now I have a question here from Eugene Abraham from Aquarius Exchange. How do you define risk scoring within the crypto industry? Assuming you have a range of 0 to 100, how do we define risk score for low, medium and high risk, and what should we consider medium risk? That's also a big question. It's how can financial institutions find the balance between the risk-based approach and follow the EBA local guidelines in a harmonized way to avoid possible fines and issues with regulators. Yeah, I think that's a very big question. I don't think there is necessarily one answer for that in terms of the risk assessment. It, needs to be done on a case-by-case basis. It needs to be done risk-based and in line with the local guidelines, and there will be guidance coming with these new packages. And from what I know of the working group I'm involved in with the EBA, that that guidance will be high quality as what we're used to from the EBA, and hopefully then the local regulators will also provide the necessary guidance. But before we wrap up here today, we've only got a couple of minutes left. I want to go back to our experts and just ask you, we've talked a lot in these last 60 minutes, but if you could just give me your key takeaways from this discussions and just provide some concluding remarks in terms of how we as AML CFT professionals can get prepared for the next generation of AML CFT regulation. So you have about 1 minute each. I'll start with Rayissa.
Thank you. I think it was a great discussion today. I think a key takeaway for me, from my perspective and what I do with IDnow, obviously harmonization is a goal and to reduce risks. I think for our customers and listeners, it's important to understand what is necessary for compliance today, what's coming, and how to get ready for that, because some of the things are same, and new requirements are also involved in these new regulations. So, and obviously there are so many customer due diligence steps and requirements in this whole ecosystem here, and KYC is just one of them. The sooner the KYC is implemented and in place, the better. So that's my key takeaway for today. Jason.
Jason.
Right. Yeah. My key takeaway is to move away from that perspective of how do we avoid having to comply with requirements to, even if it's not, directly written exactly what you must do, depending on the nature of your business, should err on the side of caution. You should actually try and have the regulatory spirit in mind as to, well, is there a risk of money laundering? And if there is a risk of money laundering with my venture, I need to put a control in place that's going to reduce or eliminate that risk. And by having the right technology in place, that doesn't need to be a giant issue in terms of your conversion or your user experience. There are solutions already in the market, so it's worth exploring what's out there to ensure that you are doing the right thing, and that's going to be not only of the benefit to your customers but also to your own business. So yeah, try and comply with whatever's written, but also think beyond that and think how do you get ready for this upcoming wave in crypto regulation.
Thank you, Jason. Nico.
Yeah, thanks to all the other panel members for their intriguing observations. My takeaway is, let's say, not that much related to regulation, as you may expect, but is more about individuals, and is a recommendation to whichever is in the financial sector. Spend money to make your system and controls effective is essential, but is by far and large more important to hire people that are competent first, and then people that have the right level of moral compass. Because whichever is the level of sophistication of your IT controls, if you have RAG actors in your company, they will find a way to perform illicit activity. So spend time and money to hire the right person and to investigate their level of ethics, because this is what is really the game changer. This is a recommendation that I would make. And another thing, side remark from a regulatory perspective, do business that is within your defined risk appetite. Don't be over ambitious, Because when you define the risk appetite, you define thresholds on the basis of your ability to control operations and to absorb losses. If you deviate from it, your entire business, it is a tremendous risk. Thanks.
Thank you, Nico. Fantastic points. Peter.
Yeah, well, I'll be short because we're already running over. I think everything that was said by the other experts, I can definitely subscribe. I think these are great points. I'm definitely looking positive into the future as my key takeaway, let's say. I think it's interesting what's happening on the regulatory side. I'm also think these events help a lot, as I said, to raise the awareness, to talk about it, to get into discussions about these topics. And definitely at the end, it's crucial what you do with your KYC, right? What are you willing to spend on it? What are you doing with it? What providers are there? How can you use them for this? And what do you do at the end with your team? And how is your approach? The sense of how much risk do you want to take and how much you want to spend on this? I think thank you for a great discussion. And I'm looking into the future positively because I see this great expert on the regulatory side, on the provider side. So I think this can move along and we can make this whole system, the traditional and the decentralized finance sector, more safe in that sense. Thank you.
Thank you all very much for your time and for sharing today. It's been a very interesting session, and we had a lot of listeners today, so you might have some questions coming through. Thank you again from my side and also from the side of Transform Finance, and look forward to speaking to you all again soon.
Bye.